So this comment's kind of been bothering me. This was on a post about the Rocket Mortgage 1% down, which Rocket Mortgage is not the only one doing it. They weren't even the first ones to do it, but that's besides the point. But when I made the comment that PMI is against default and that for FHA a PMI is lower, the answer is if it protects the lender should pay for it. My response on it was a little snippy of, put down 20%, then you don't have PMI, if you can qualify for conventional. PMI is insurance for the lender in case you default on the loan itself. And conventional loans, the PMI is much higher than it is on an FHA loan, but it's what allows you not to have to put down 20% on a home. And especially at a time when, home values are super high, to say, well, it protects the lender, so they should pay it when it's for your benefit, it doesn't make any sense. What also doesn't make any sense is that if you actually look at PMI and how much PMI is per month, especially if you're going FHA, it's not as much as some of the other things that you're subscribing to. It's not as much as some of the payment plans people are on for new phones. It's not as much as some of your subscription services for streaming TV when you add them all up and then add in your internet at the same time. But what you get out of it is a house. You get to own a home and have control over it and build equity and have a place that's for you and your family and, own your property where you don't have a landlord that's consistently increasing your rent, and you have the opportunity to eventually refinance down to a lower interest rate or pay it off completely. So while a lot of people were like, PMI is bad, it's horrible, I don't want PMI, it's really not as bad as people think, and you don't really even notice it for the most part. And it's really not that expensive. It's just a way for you to be able to get into a home at a lower down payment, which the biggest barrier is always the cash to close. Not just the down payment, but your title fees, your new escrow account, your homeowner's insurance for the first year, your deed and tax transfer. So not having to bring so much cash to closing makes it easier for people to get into a home. Once you get to an 80% loan to value on the property, if you're in a conventional, you can do an appraisal and then petition to have the PMI taken off your loan. If you're in an FHA, you can refinance out of the PMI. It's not a horrific thing. So when you're looking at loan options, look for what's going to fit you best and help you get into your home. And I'm a firm believer that the least amount of money out of pocket is always the best way to go. But this comment was really bothering me, and I just needed to say something about it.